Being a CEO, you have to not only look into your business itself, but also the macro environment.
For a small company to go public, the most important thing is quality research. Having a very stable shareholder base is godsend.
I guess I would kickstart with how to become a CEO, right? But I think being a CEO, you have to not only look into your business itself, but also the macro environment. And I guess everyone here will agree that it is very complex right now. Geopolitical situation, the economy, and we have so many elections this year. So how do you see about the trend? Is it going to worsen, or you see there is some light at the end of the tunnel?
Thank you, Cindy. The economy question is a very complex one. So number one concern that we all had was inflation. So inflation was very rampant throughout COVID, and we kind of looked the other way. And then the only way to cure it was what we experienced in the last 14 months, which is the 500 basis point climb in interest rate. Mm-hmm. And that was the beginning of put everything kind of in a tailspin. Nobody know where they are. They will lay off, and people stop hiring, people stop spending. There's no way to answer this question holistically, because I think now in the world, economy is not a one single thing. I mean, you look at Japan. Japan is, the interest rate is artificially low. I mean, to a point where I think the Japan Central Bank of Tokyo is about to step in to do something with the currency, but they have to be very careful, right? For the longest time, they couldn't lend any money. So for them to be able to yielding as much as the rest of the world for all the people that have deposits in them, it's going to be a major challenge. But then you look at in the U.S., the U.S. basically looked the other way and said, oh, inflation, don't worry about that, okay? Oh, that people are laying off, don't worry about that. So where are we going to find new places to invest money? And for the business that we're in, it's very interesting. So if I look at what happened between 22 to 23, mm-hmm. 23 was a really difficult year for tech. Mm. Difficult year not just from the perspective for the people that are investing in a tech company. We was greatly worried a lot of the tech company was going to go under because there were no hiring. Yeah. But then the first 4 months in 2024, everything went the other direction, right? And they're so active, mostly because of AI, but other areas, like Web3 and even fundamental technologies are getting hot again. People are paying big money. So once that motion's reopened, it's got going again. I think the ultimate indicator that we have to watch for is what people are looking for is, one, is the IPO market's going to come back, because liquidity is everything. So if we have no liquidity for deals, then the late stage deal is not going to happen. If the late stage deals, people are not investing in late stage deal, mm-hmm. then there's no need for early stage deal. Right. Then the whole chain stops. So I think that's a tough question. Now, and the other thing we'll look at is, from a geography perspective, mm-hmm. now we are completely disjoint. So it used to be, if China do well, you can see, because tons of investments are coming from the US into China, they are completely linked. Now they are starting to separate. Mm-hmm. So if China is doing poorly, doesn't mean the US is going to do poorly either. The US is going to do poorly, doesn't mean China is going to do poorly. So we have that dislocation as well. So it's a tough question to answer. I think overall, it's better than last year.
Mm-hmm. Do you think we talk about the meeting by Premier Xi with the representatives from American chambers, right? Do you think that is shedding some positive sign?
I only watched part of it, so I don't know if any of you have actually watched the clip this morning. That I think in many ways is very different. First, none of them were sitting at a sofa, right, which is typical Chinese style of having meetings. They actually were sitting at a table, U-shaped table, and you have two sides that are Americans, but they are not business people. They are like from various associations, the mm-hmm. Chamber of Commerce, that are representing the business people. So you kind of know what message they are asked to carry to see President Xi. And it was amazing. President Xi's gesture and his whole tone was literally extending an olive branch and say, hey, it's enough. Nobody need to fight with anybody, okay? I'm cool, okay? What do you guys need, okay? Let's just figure this out. I have not seen him do that, I have to be honest. To me, that's a great sign. I think in particular, For Hong Kong, it can come at a better time. So I think in many ways, I think at least that the first 20, 30 minutes I watched was, I walked away thinking, wow, this is good.
I see. So with that, you know, the complexity of the geopolitical situation and also the slowing of the economy in mainland China, for the startup founders here from Hong Kong, right? What is the go-to-market strategy? Would you, if you were a founder right now at this point in Hong Kong, would you consider going into mainland China or Southeast Asia or other parts of the world? How will you strategize?
Cindy doesn't have any easy question, right? So, and I wish I have a perfect answer for this. I have actually met a lot of Hong Kong founders in the last several months, literally looking at the possibility of investing in them. And this subject is probably the most important subject on my mind because this is the one thing I hate about the VC. I used to be on the other side pitching to the VC. The VCs always come to me and say, Alfred, what's your TAM? How do I know what my TAM is, okay? So I'm selling middleware. The TAM is the world, the planet, you know, maybe the Mars, I don't know. But VC love to ask this question, what's your total addressable market? So when you ask that question, and now you have to narrow it down and say, well, which part of the market are you going to go after first, right? And that sometimes can entrap you in your future direction. So this is the toughest gig for Hong Kong because Hong Kong's own domestic market for anything is limited because that's all the people we have and that's all the consumption that we have. So we have to go somewhere. I think historically, there hasn't been a lot of very successful Hong Kong company that were able to enter the Chinese market. First, they have a lot of things going on. Two is, for whatever the reason is, we haven't succeeded in this part of the integration, right? This is something actually we have to be reckoned with. It's the world's second largest economy. And for anyone who actually are in the, say, in the software business, the first market you want to go to, you know, like for people in the US, you know why there's so many technology companies in the US? Because you don't even have to go anywhere to sell and sell and sell till no end because the consumption in the domestic country is enough to build the world's largest company. China is the same. So I think for us not to look at China as a market, right, it would be a huge mistake, especially with all the Greater Bay Area activities going on. I know it's tough. I know it's not the most pleasant answer, but it's not something we can avoid. I see the most common thing with a lot of founders that we have met recently are looking at a Southeast Asia market. Now this, we're going to go straight into competing with Singaporean companies, the Malaysian companies. So it's not terribly easy either. And clearly, we're not Malaysians, we're not Singaporean. So now we're going to be handicapped in that case. But it's a very viable market. It's very large for SMBs. So it's possible. So the nirvana, obviously, will be to be able to go to the US and go to Europe. And some of the folks in this room have succeeded very well. So we invested in one that, 60–70% of our sales is in the Western market. It's harder, right? And the restrictions making it harder by the day. But I think I would look at it that way. But we have to be very deterministic in what step do we take. Don't pitch your investors to say, well, I'm going to go here, I'm going to go here, I'm going to go here. It's just not possible. Go to market has to be something extremely concentric because you have to hire people to do it.
True.
Yeah.
Very true.
Yeah.
So these are all relatively mature companies. I mean, Series B and above, right? So many of them may be thinking about, the next step, right? Taking the company to IPO. So in addition to asking, JP Morgan for advice, what do you think a CEO should ask himself or herself before, thinking about IPO? Because you have gone through the journey, right? Is there anything that you think you haven't, you have done it in a different way?
Cindy, is a very good question. The market that I was in, the overall equity market I was in, that we went public in 1997 is drastically different than the market now. And this may be a thing that most people have not noticed. So back then, 20-some odd years ago, we have a very, very different setup between the investment bank, especially the research brand of the investment bank, and how they follow the company. So we have a lot of small to mid-cap companies who were able to successfully go out raised public money, and grew to become a large company. That was us. We went out. I think our market cap initially was like less than $100 million, and we were able to get to like $58 billion as its peak. Because there were a lot of small investment banks, and they have research to follow very small companies. When the dot-com bubble bursted in 2000, in April 2000, consolidation happened. So then all the investment banks, we don't have boutique investment bank anymore. So investment banks are very large. Looking at the furnishing and the table and these fancy leather chairs, this is a big investment bank, right? They do big deals. So for a small company to go public, the most important thing is quality research, because that's what the investors follow to buy the stock and hold on to the stock for the long term.
Right.
It's an extraordinary, crucial thing. So going public now is not for the faint-hearted anymore. You really have to be thinking through this. First of all, there is nothing is going to be personal or company anymore. Everything is personal because you're going to be attacked personally. Being a public company CEO was very, very painful, right? And if you become big, Brian's here, oh my God, you say one thing, as we have witnessed, so Jack, right? It can toss the market completely upside down. So your responsibility is immense, right? So I think this is something that people have to think about. I did it for 44 quarters. So I never count anything in quarters, okay? 90 days at a time. And every 90 days I say, oh my God, thank God I survived. And that's another 90 days. It never ends, right? It goes on and on and on and on. It just never ends. And everything about you is now public, everything. It took me a decade to find a way to completely become disappear in the world until I met Edith. Okay, so yeah, she's incredible. Okay, so but seriously, live life privately is a wonderful thing. That's something you have to think about. Now, what's the benefit? There's a huge amount of benefit. When your entire balance sheets and your P&L is completely audited, and every quarter you report to the world, your customers feel comfortable. You can sell to people and do huge deals you otherwise couldn't have, right? I don't think I could have gotten JP Morgan and Sugar Daddy for that long if we weren't a public company, because there's no way a bank doing such important things would have trusted us.
Right.
So to me, that is still the path to go, right? But it's just that you have to be careful what you're getting yourself into. Yeah.
So I want to follow up on this. In terms of the market, we know here is basically, I would say IPO is quite dead, right, here in Hong Kong. So do you, how will you advise in terms of the location for doing the IPO? Hong Kong versus the US? My boss, Joe, always advise our entrepreneurs saying that if you go to the US, it's very hard for you to sell your story, because investors are based there. They do not know your service. They not have used your service, right? It's really hard. But then, of course, the requirement, or it is more flexible to list on the US side. But and here is that. So how will you weigh that?
Yeah. You know why people go list a company on NASDAQ on the New York Stock Exchange, right? It's only because the quality of the buyers of the stock goes to those markets. For several reasons. One is you have the biggest audience in the world that are constantly, it's the biggest market. So you will have the people that will have the most capital available to go in deep into your stock. That's number one. Number two, a lot of these shareholders, hedge funds, very large family offices, they can hang on to the stock for a very, very long time. Turnover of the shareholder base is a horrific thing. Having a very stable shareholder base is godsend. So that's why people ultimately goes to those markets. Now, Hong Kong historically was following right behind, was a terrific market for that blend of Asian flavor. There were actually companies, if you look back like 10 years ago, American company coming to Hong Kong to co-list or list company here. So that was a very popular thing to do because they want to cater to the Chinese investors, right? And make it easy for them to be able to invest. Right now, we're all over the place. it's very, I mean, I will not judge Hong Kong and Hong Kong's exchange and its current performance to be representative of what it will be, let's say 3 or 4 or 5 years down the road. I think if the Chinese economy has a quick bounce, let's say within the next 36 months, this market will be active again.
Right.
And then people will say, oh, wow, you know, there's so much Chinese money. How do I tap into them? I'm going to start co-listing here again. So that's going to just reopen. It's just very practical. This is not personal. It's just money. That's it, right? Yeah.
True, true.
Yeah.
Okay, so wearing your investor hat right now, right? How do you see, you know, what sectors are you interested in? Everybody's talking about AI. How do you see this boom?
If there's no bubble, there will be no technological advancement. And it makes sense because we know you have to put 10x, 20x, 30x more than the needed capital to create something very quickly. And that's been our way. Doesn't matter what it is, okay? Whether it was mobile, whether it was internet, anything else. However, I think as a geek, AI is, to me, is nirvana. I spent my whole life waiting for this moment to happen, right? I mean, like, we first have basically sequential data to relational data, and we thought that was very cool, right? And that lasted forever. And then eventually now we have unstructured data. So I spent basically my last 12, 13 years investing in an unstructured company, right? Databricks, you know, all of these companies. And when I started doing it, people thought I was just nuts, right? Why do you need every activity captured? What do you get out of it? Now, that's the only thing that mattered, because without that, we wouldn't be able to mimic the thinking of a human. So that's so, like, profound. So I think this shift to AI likely will yield in the next 5 to 7 years of every single app and every single thing that we touch that needed software to be rewritten. It will be the biggest revolution in the software world ever. And I think it'll be inevitable this is going to happen. And we're going to put a neural network, a thinking machine, into every little thing that we do, things that we don't like to do. And I was explaining to the folks section on Monday about in climate. I said, counting on human to save the planet, forget it. Because we're not making enough money to save the planet, so it's never going to happen. What is much more practical is to use AI with an incentive, right, to go save the world when we are not working, and just let AI do the other 16 hours on our behalf to not do any more damage. That's much more practical. And if that is blended in and the incentive is there, we can go save the Earth. It's actually possible. And the audience love hearing that. You know, they say, oh, wow, we can make money off of AI for saving the world. That's what we're in. So I think, I know everything's back to the money part. We're in the right place. Okay, so we're in a bank. For those of you that are not directly doing AI, your company's on AI, still AI is going to be a very big integrated part, integral part of what you do in the future anyway. So, I think one thing is the hype, one thing is the marketing and the positioning, one thing is the reality, okay? So we're all going to be doing some type of smart neural network-based things to drive processes to make us so much more efficient. That's just inevitable. It's all going to be happening. Very exciting, yeah.
So which area of AI will you be looking at?
So for us, we're focusing on the stack. I'm going to tell you straight up, what are we doing? So the most exciting thing to me would be not consumer technology in this case, because that's mostly because the revenue is not going to come directly through the technology itself. We don't invest in foundation model because it's kind of like search, right? Search can be given away to everybody to use. All the consumer don't have to pay anything, but yet there's plenty of revenue to be able to continue to fund search for everybody to use because the ads was plenty useful. I think similar thing is going to happen with the foundation model. The much more interesting thing is going to be, how are we going to be able to re-engineer all these very old process and old systems in large banks and large telco and large logistics company that's been around for 30, 40 years. This will be for the first time we are incentivized, because we're going to be so much more efficient to rewrite those applications, right? And that stack to be able to build these applications easily is undefined. And it's likely going to take a while, maybe a year, 2 years, 3 years, before this will emerge. We're seeing barely they're scraping the surface at the beginning, right? Obviously, you can now tweak the prompts and make ChatGPT to do what you want it to do. But programmatically, to be able to put it into an application to to rewrite like a sales application or to rewrite a private bank application, we still have ways to go. That, to me, is the biggest opportunity for us.
Right.
Yeah, for race in particular. Yeah.
Okay, I think we have used up all the time, so we can talk more later on.
Yeah. All right. Okay.
All right.
Thank you.
Thank you.